Hello and welcome to the webinar titled Trading Range-Bound Markets. My name is Brian. You have my contact information there. You also have the website where I post daily market commentary, including commentary from today at dailyforextradingedge.com. And then you have questions about what I do as far as working with individuals. JupiterPeakFinancial.com there is my website. Before we get into things, your participation is important. So if you have any questions, please type those into the questions function there. You'll have to type them in and then I'll see them and I'll answer them. But again, before we get into everything, we always go through a disclaimer. I'm going to leave this up for just a few moments. And the next one here, volatile markets disclaimer. In volatile or fast-moving market conditions, stop and conditional orders become market orders to be filled at the prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed. Substantial losses may still occur. So what we're saying there is there are no guarantees that every order you put in becomes a market order, and depending on how fast the market is moving, it can get filled. Your order can be filled differently as far as the price goes than what you are planning. So just be aware of that. Why can the markets move very quickly? Well, with our outline of where we're going, we'll talk about fundamental events, the macro and micro events, technical analysis, intermarket relationships, long-term trends, and which pairs are range-bound short-term, and strategies to trade those range-bound markets using support and resistance and a few different indicators. And then, of course, we'll do the review, questions, and provide you the links for additional resources at the end. The importance of fundamental analysis, again, I think that this is a very macro, fundamentally driven market, and I've stressed that month after month after month after month, and nothing is changing. We know that the central banks around the world are chiming in and providing liquidity measures, and the equity markets in turn are doing very well, and that continues today as the stock market in the U.S. makes another all-time high ever, and obviously that's spurred by the Federal Reserve and other central banks making sure that economies know that they're there for them. So that can spur big moves because the markets, we don't know for sure when a speaker is going to come on. We try to, but we can't be aware of everything, and we can't prevent surprises from happening. So a major news event out of the central bank could affect the markets in a great way, and the Forex markets can move hundreds and hundreds of pips, either for us or against us in one direction. So just be aware that that can happen. Your broker is trying to keep you informed of fundamental events. That's why I'm here. I'm one of the analysts that provides information on behalf of IBFX. So whether it's me or the other great analysts that provide information, make sure you're taking advantage of it. ForexFactory.com, we probably don't need to go in there today and look at it. It's a pretty light week. I've also updated that calendar via my market commentary on a daily basis. So if you have questions about what big events are going on this week, that's a great way to stay on top of it, would be staying on top of my daily market commentary that I provided the link there at dailyforextradingedge.com. But stay on top of those events at forexfactory.com. Obviously, TV stations such as CNBC and Bloomberg and other market sites that you use. Technical analysis, as always, I just throw these terms out. Trends, which way is the market trending, or your pair that you're trading, the pairs that you're trading, which way are they trending? Where are they buying it, which is support? Where are they selling it, which is resistance? And any intermarket relationships out there. And I'm always looking for ancillary markets to help me trade. Equity markets with foreign currencies, or commodity currencies such as the Aussie dollar or the Canadian dollar with different commodities that their country is rich in. What are you finding that's giving you a trading edge? That's what we're always looking for as a trader, is an edge. So let's move into the next slide here. And equities and the VIX long-term analysis. So be aware of other markets, and then we can look at the Forex pairs on long-term trends as well. So we'll go into two different platforms here. We'll use IBFX and the MetaTrader 4 platform. We'll also use their sister company to look at equities in the VIX using the TradeStation platform. Let me just get this next slide loaded up so we can pop right back to it. So let's look at some long-term ranges. I'll just pause here while I switch platforms really quickly right here. So here in front of us, you have a yearly chart roughly of the S&P, and you can see the big move up today. If I bring this down to just show more recent data, you can see that we had a huge move up in April so far. But again, for the most part, since the year started, year to date, if I find the beginning of January right here, fiscal cliff top was right here. We went from 140 all the way up to the 157 mark, 158 mark today, almost 159. So we're going to go to the 1600 psychological mark probably pretty soon in there. So remember, this is just 10% value of the index. So if the index is at 1590 or 1580, this would be at 158 or 159. So 1600, nice round number coming up. That would be 160 in this index. So just the opposite of as far as direction goes. If we look at the VIX on a daily chart, which way is volatility going? Just so you're aware of trends, the volatility has been decreasing. And the question I ask you, with volatility decreasing, are trading ranges bigger or smaller on average in Forex? And the answer most likely is smaller, although we are having some breakouts and some bigger than, larger than average trading ranges a little bit more often, it seems, and that's what I wrote about in yesterday's commentary, that I believe that we'll start to see a little bit more active trading ranges. We've seen it in previous summers, in summer of 2009, summer of 2010, summer of 11, summer of 12. Hopefully this summer of 13 will be a little bit more active than the beginning of 2013, and trading ranges will continue to get larger. So keep an eye on that, especially when you keep an eye on how far the markets, the equity markets have gone, how fast they've gone, and maybe they're due for a little bit of consolidation in that trading range. Might be good for the Forex markets. So Forex markets, what have they done long term? These are daily charts that I have pulled up here of the majors, the pound versus the US dollar in the upper left, the euro versus the US dollar in the upper right. Then you have the Asia Pacific, Australian dollar USD, New Zealand dollar USD, US dollar Canadian, and US dollar Swissy. So 4 of these currencies out of the 6, the US dollar has been strong. Since the beginning of the year, the long-term trend in the pound has been down in the pound. A little bit of retracement now, but down in the pound. Same thing in the euro. Since the beginning of the year, down in the euro on a daily chart. As far as the Aussie dollar goes, up against the US dollar. New Zealand dollar, up against US dollar. And then you have the US dollar versus the Canadian, the US versus the Swissy. Those are the other 2 pairs where the US dollar has been strong. US dollar straight up against the Canadian, now starting to consolidate, and the US dollar up against the Swiss franc and now starting to consolidate. So I actually wrote today's market commentary as a primer on this as far as trading ranges on the shorter term. So let's fly back here into the slides. Short-term ranges. Equity markets in the VIX, what are they doing on the short term? Well, they're not in a range. Equity markets going to the moon, volatility is going down, but what about short-term ranges in Forex pairs? The pound US dollar, do we have a range? And when I did created this webinar, I created this about 3 or 4 weeks ago because it has to go through IBFX's compliance before I get online and do this. So things have changed. The pound US dollar, not so much of a range. We'll look at that. But the US dollar Swissy, a little bit of a range, but there's a new one that's come up, and it's the US dollar Canadian. So I want to show you that first. Let's look at the, just so you can see, the pound versus the US dollar as of late, again, shorter term. I'll move to a 4-hour chart for the past month. We were kind of sideways. When I created this last month, we were right here, right in this area, and you could see there was a nice range going on here at the lows and a nice range at the highs. But as you can see, we continue to retrace up, and the pound broke out to the upside and is kind of headed up and now has a new support range here and a new resistance range here. So maybe really locally, if I bring it down to an hourly chart, maybe you could say there's some support down here at the 52 area and some resistance up here at the 53.30 area. The other pair I had was the US Swissy. And again, when I did this webinar, it was about a month ago as far as when I created it, a few weeks ago. And you can see here that at the beginning, pretty sideways here. If you look, when I created this in March, pretty sideways. It's kind of broken down. The US dollar has lost a little bit, gained a little bit of ground, but here was a lot of sideways action. So this hadn't broken down when I created this, but definitely resistance up here. US dollar trending up, ran into a bunch of resistance here, and the US dollar had some support here, and it's given back ground. Now is it going to find a new support level? maybe if you look at this level right here, and sorry, I got to move my moderator panel here, the 93-ish area right there, is that a new support level right here? So if I draw a horizontal line just for you to see, you can see right there around 93 even, maybe we find some support there. But the real one as of late, the big picture in the U.S. Canadian, the U.S. dollar was strong, and then it gave back some ground as of late. But where did it give back ground to? Right now it's sitting on this 38% mark. Go down to the 4-hour chart. Here's your range right now. Here's your shorter term trade. Is 38.2 becoming support, and can you be a buyer down there at the 38.2 mark? So that's what I'm focusing on range-bound markets is longer term trading, definitely trending, but shorter term trading, swing trading, scalp trading, we're finding a little bit of a base here. I'm not saying that that's the holy grail. I'm not saying that it can't be violated, but that's why we have trading plans. I believe it's going to hold support here. I buy it here. I put a stop in below the support level. I put a target in above, and I have the proper risk to reward ratio. So I'm not saying to go ahead and forget. I'm not saying that you want to forget about your account risk, how much you want to risk of your overall account on this one trade, how the trade risk, how many pips you want to risk on this one trade, given the charts and what they're telling you. How many pips do you think is realistic when it bounces off the level of 101.25? Do you think it can go to 103, 104, 105? Probably not. Do you think it can go from 101.25 up to 101.55 and go up 20 or 30 pips? Yeah. So if you think you can go 30 pips, and that's realistic, then how many pips do you want to risk to make 30? Do you want to risk 80 to make 30? Do you want to risk 30 to make 30? Do you want to risk 20 to make 30? Do you want to risk 15 to make 30? Probably the latter. You want to risk 1 to 1. You want to risk 1 to make 2. You want to risk 1 to make 3. You want to risk 1 to make 4. So you don't need to put your stop far below this level, because if you're wrong, it breaks support. A lot of people see that, and it starts to go lower and lower and lower. And the next support level, is it a Fibonacci level? Is it a moving average? Is it when a stochastic is too low? Is it bearish, bullish divergence in the MACD? Is it a price pattern like a double bottom or a inverse head and shoulders? Whatever it may be, it will stop going down at some point, but that doesn't mean that you need to stay in that trade and have a loser because you were only going for 20 or 30 pips. That doesn't mean you stay in a loser for 50 pips or 80 pips or 100 pips. So that's a short-term trade that I wanted to show you where we are seeing some consolidation as of late in the U.S. Canadian. We are not seeing consolidation in the New Zealand U.S. dollar. On the daily chart, on the weekly chart, we're close to all-time highs there. All right. On the daily chart, it's breaking up and up and up. And on the 4-hour chart, it's definitely a trend to the upside. So very hard to say that that is a range-bound trade. Same thing with the Aussie dollar. Definitely heading to the upside here. But what you might be able to see, the longer-term trader might be aware of, look at all of this resistance. Is this range-bound right here? Look at the Aussie dollar on a daily chart. 105.75, 105.75, 105.75, 105.75 over and over and over. We're right there again. And guess what, guys? We turned around off of it so far as we're trading on a Thursday in Australia right now. All right. They actually are trading down. So the new day has already started in Australia. I think a lot of people that are listening in tonight, people are from all over the world. A lot of you might be trading the Aussie US dollar during the Aussie session. A lot of you might be trading the Aussie against another currency out there in the Asian time frame, or the Asian European mix in the next few hours as the European markets get ready to open up in the next 3, 4, 5 hours. So keep an eye on that resistance level. Long-term trader might be saying, hey, here's my perfect example of a range-bound market. It is now at the top of the range. Can I be a longer-term trader and risk 100 pips to make 400 pips? Because that's what's happened. Every time it's bounced off this 105.75 level, it hasn't gone down 10 or 15 pips. It's gone down 104, 103, 102. It's gone down 200, 300 pips. So you could risk 150 pips, 100 pips to make 200 or 300 pips. That's up to you as far as your trading time frame, okay? All right, so let's move back into the slides and finish up. And just to finish up here, technical analysis, price patterns and indicators. So I just talked about resistance in the Aussie dollar versus US dollar. I talked about support in the US Canadian, And then just a couple of indicators that help you in range-bound markets. Remember, not every indicator works in every type of market, so be aware of that. So you have a MACD, moving average convergence divergence, and you have stochastics. Those work well in range-bound markets. So I'm not sure if I'm still connected or going, but I'm going to just keep moving forward and bring back up the US Canadian and throw in my stochastic here. So we can throw in some indicators. And go into oscillators because we're not trending, we're going sideways, and that's what oscillators are. And we have our MACD, and we'll just let that go to the defaults. And we'll throw in our one more, the stochastic, and show you here how they're lining up. So again, we're using these bands as they're overbought or oversold, as the MACD is crossing that zero line up and down to tell us if it's overbought or oversold. So I just wanted you to be aware of two different indicators here in the IBFX platform that help you with specifically range-bound markets. And if you don't know about them, then you should go learn about them and make sure that you're aware of them. To review, fundamental events keep on the macro and micro events, such as the central bank moves and things like that with interest rates, technical analysis, trend, support, resistance, and then obviously some of the indicators we talked about. And Forex pair analysis, the indicators used to trade range-bound markets. Moving into resources, this sheet right here in front of you has all the different resources, like I said, posting the daily market commentary at dailyforextradingedge.com. And if you have any questions, you can always reach out to me at my website there, jupiterpeakfinancial.com at the bottom. So lots of great information that IBFX gets out to you. Make sure that you take advantage of it to stay on top of your daily routine when it comes to fundamental and technical analysis. With that, thank you very, very much for attending, and we'll wrap up, and in 2 weeks.